Hello, and welcome to Macro Minutes. During each episode, we will be joined by RBC Capital Markets experts to provide high-conviction insights on the latest developments in financial markets and the global economy. Please listen to the end of this recording for important disclosures.
Welcome back to Macro Minutes, the European edition. Today is the 14th of May 2026, and my name is Peter Schaffrik. Today, I'm joined by Cathal Kennedy. Cathal is our UK economist, and I invited him back to the podcast because I feel we kind of have to talk about the UK. We labeled this edition Anarchy in the UK. And even if the title is lost on the younger listeners, those in the market will surely know what we're talking about. A couple of weeks ago, or a month ago, the UK market started to underperform aggressively as monetary policy has been entirely repriced from rate cuts to rate hikes. We're now pricing about 2.5 rate hikes, and on top of the international developments comes the political turmoil domestically. That has also bled further out the curve, and gilts are now looking cheap on pretty much all of the models that we are running. But the question is where to go from here. But let's rewind and let's bring Cathal in. Well, Cathal, thank you for being with us. And I can only say, here we go again. And maybe for the benefit of those who may not be up to speed with the ins and outs of UK domestic politics, can you give us sort of the short 2-minute version of what we're dealing with here?
Yeah, hi Peter, and hello to everybody listening in today. Yeah, look, the starting point is last week's local elections here in the UK. Now, normally these aren't a very big deal, high profile or market moving event, but this kind of particular round of elections was seen as a big test for the leadership of Sir Keir Starmer. And also the point at which kind of most clients we speak to had seen as a potential trigger for a challenge to his leadership. So the outcome of the elections were as expected, really. Labour performed badly. In England, where they were defending around 2,200 council seats, they were left with 1,100 after the votes. In regional elections in Wales, which is a traditional heartland for the party, they were pushed into third place in the Welsh Assembly. And like I said, a lot of this poor performance was expected. That was what the pre-vote opinion polls were pointing to. And indeed, immediately after the vote, we got a little bit of what you might call a relief rally when the market took the view that the results weren't so bad or within the tolerance levels, if you will, that meant that Starmer would face an imminent leadership challenge. But in the days afterwards, particularly kind of early this week, and a rather poorly received speech on Monday to try and kind of, sort of revive his fortunes, the level of dissatisfaction that was already there really kind of has been bubbling over. And, we're now moving to a situation where, there's a major resignation today of the health secretary. And we kind of, we are moving to a position where some form of leadership challenge or leadership contest now looks kind of a likely outcome from here.
I want to talk about sort of the path forward in a second, but again, sort of maybe just for the benefit of everyone's listening, you just said leadership challenge. Can you just explain what that means or why specifically using that phrase? People outside of the UK might not necessarily be familiar with like how that works over here.
Yeah, so in this case, we're mainly kind of talking about the Labour Party's internal rules. And essentially, unless the leader of the party resigns, really the only mechanism for removing them is for one of the party's MPs to seek the nomination of 20% of their fellow members of parliament and challenge them. So outside the party's annual conference in the autumn, there's no mechanism to table a motion of no confidence in the party leader. And, sort of after the local elections, what we now see to be in a situation is that potential challengers are, shall we say, kind of more emboldened to come forward and more likely to get the requisite number of MPs willing to support them to be nominated to challenge the leader.
Yeah, and just, from my side, on the market side, of course, I think one of the reasons why this is also relevant is clearly because there's a fear in the market that if Starmer, and probably with Starmer, Reeves as the Chancellor, if they're going, One of the things that they've been doing, even if you sort of take the view that they've not been doing many things right, is that they have put fiscal stability at the heart of what they've been doing. And sort of fear in the market clearly is that somebody else takes over who is less minded to keep a tight grip on the finances. Right, Cathal?
Yeah, I mean, kind of hit the nail on the head there, really. I mean, this is where the market sort of interest in this really comes from. I mean, we said on the previous edition of Macro Minutes, churn's just a feature of UK politics now. It's, if Keir Starmer does go, it will be a sixth Prime Minister in 10 years. But really, it's, in the UK system, the Prime Minister and Chancellor kind of come as a pair. And it's very rare for a new Prime Minister midway through Parliament to kind of keep on their predecessor's Chancellor. So, like you said, the market's concerned, that the UK's fiscal plan, its fiscal rules won't survive that change of leadership and challenge. And that the path of fiscal policy under Starmer's successor and their chancellor will be looser, borrowing higher as a result. And one thing I would point out as well, I think markets are also a little bit sort of conscious that there are already a number of upward pressures on spending in the UK. The government is yet to announce a fiscal support package in response to the energy price shock, unlike a lot of European peers. And there's a promise on lifting defence spending by 0.5 percentage point of GDP that still has to be funded as well. So, on top of those existing spending pressures, the market just assumes that a change of leadership would see further fiscal loosening.
All right, let's park that issue about fiscal for a second and let's return to the issue at hand. So after many months of waiting for this event, it looks like it's finally here, and we might be getting some near-term clarity. So how do you see this developing?
Well, kind of one thing I would sort of point out is, even if we get clarity on if indeed the Prime Minister Starmer will face a leadership contest, these can actually be potentially drawn out affairs. There's no timeline set out in advance. Rather, that's decided by the party's National Executive Committee. Because the electorate is quite large, there's not just MPs involved in this process, but also party members and members of affiliated bodies, which are mainly the trade unions. So last year there was a deputy leadership contest and there was 970,000 eligible votes. So there has to be time set aside for a campaign and for a window for voting to take place. Again, in last year's contest, that voting window was 2 weeks. So as I mentioned, we've had the resignation of the Health Secretary today. Looks like it could perhaps trigger something in coming days. But I think my message I would sort of give at this point is, don't expect any of this to be quickly resolved.
Okay. Well, again, for markets, I think that's one of the problems that I see. That, on the one hand, you might not be getting a quick resolution anyway. Secondly, even if we have a resolution on the political side, whatever that person then might do on the policy side, fiscally, remains to be seen. And I think the market is not going to like that uncertainty for quite some time. But actually, Cathal, as a strategist, I'm trying to think forward. I would postulate that whoever comes in is probably going to run into a very similar situation, that he or she might not have the support of the party for quite some time. And I can see an environment where over, let's say, the next 12 months or so, we're even facing calls for new elections. And here, people might gather that I've got a European accent. If I look at the latest polls, if I look at sort of the outcomes of the local elections, it strikes me that we might be ending up with not only a so-called hung parliament, but with a very splintered parliament, which looks much more akin to what we know from places, let's say, the Netherlands or Italy. And what is your thinking on sort of the more medium path forward on the political side?
Yeah, Peter, just kind of, sort of in the near term, the points you make there, and you and I often discuss, there's a lot of debate in the UK around fiscal rules and so on. But, I think any government kind of faces the ultimate binding constraint, which is, the gilt market and how much it's prepared to lend and at what price. And, like you say, it's very difficult for an incoming leader to kind of both, shall we say, appeal to the gilt market while at the same time appealing to essentially their own MPs and party membership. So, but your point on kind of the Europeanisation, shall we say, of British politics, I mean, it's very fractured at present. If you looked at last week's local elections, the projected national vote share based on those results showed the Reform Party in about 25%, and then four of the parties on between 16 and 18%. And this is in a voting system and political system that's kind of, shall we say, unsuited and unused to these kind of outcomes. It's interesting that you kind of raise this now, because in recent weeks we've had loads of conversations with clients about UK politics, and the focus still very much on what happens this side of the next general election in presumably around spring 2029. But we've had a few beginning to discuss what might come next. And this is really uncertain. We're 3 years out from the election, and we're projecting kind of what we see in front of us right now, 3 years into the future, in effect. But I think the default of most clients is that you would assume, they seem to assume that you would get a one-party or stable coalition government in the UK after the next election. And I think kind of the point I would make anyway, is that the first past the post system that's used in the UK can produce quite variable outcomes. And what I don't think is perhaps on clients' radars necessarily yet is the possibility that we get a truly hung parliament after the next election, one where there's no viable government that's possible to form, or one in which a fairly unstable coalition emerges. So I think that, for me, is kind of one of the big takeaways from the kind of fractured nature of the vote we saw last week, that it potentially begets sort of more political turmoil, more political uncertainty further down the line here in the UK. And, there's a scenario sort of going forward where even after the next election, that sort of uncertainty becomes a real feature of the system here in the UK.
Okay, Cathal, let me bring it back into the here and now and bring it closer to markets. So one of the things that has been clear feature of this latest sort of underperformance of gilt markets, in particular of UK government bonds, is that it has not only been driving, let's say, the premium of the sovereign, but also the pricing of the Bank of England has increased in terms of hikes. And I guess the rationale is, if we end up with a looser fiscal environment, that probably means we have to have a tighter monetary policy. But I mean, if I look at it, A, this takes time, as we just discussed. And secondly, for the bank, it probably takes even more time because they need to see actual policy. So is that your understanding as well? Is that how you think about it too?
Yeah. Look, in the here and now, the bank's dealing with the fallout of the Middle East conflict. But, if you think about the timelines that are involved in one political process playing out, and then the next leadership introducing a budget in the UK, that's your major fiscal document in the UK, is the budget. Now, that won't happen until the autumn, say mid to late October or early November. And the Bank of England's stated policy is it only builds fiscal changes into its framework once they're announced. They won't preempt any fiscal change that might result from a change of leadership. So the bank will need to see a budget and then incorporate that into its forecasts before it makes any policy judgment. So let's go back to our timetable. Let's assume that all this comes to a head by the conference season in September. It'll be perhaps November by the time a budget is introduced. So any Bank of England response is probably not forthcoming until early next year at their first forecast round of the new year. So really, for the Bank of England, this is probably an early 2027 event rather than one immediately or even this year, if you will.
Thank you, Cathal. Maybe if I wrap that up. So the uncertainty, I think what I learned is the uncertainty in the UK, domestic uncertainty, is not going to go away quickly. The political trouble is probably going to outlast even the next leader, and is unlikely that we will get any kind of very, very stable government in place anytime soon. So we have to build that into the market over the more medium term. In the near term, however, particularly as far as Bank of England expectations are concerned, we shouldn't be pricing of that domestic uncertainty straight away. So what we are thinking in terms of how to position in the market is you still have to be reasonably cautious with UK govies in particular. You shouldn't be rushing into that underperformance that we've seen. Surely could be a short snapback, but over the more medium term, that premium that's built into the UK market is probably going to be there for quite some time. Yet, if you are somebody who's active at the very short end of the yield curve, there is probably an opportunity here, because what we're seeing at the moment being priced in terms of rate hikes might well not transpire at all. And without stealing Cathal's thunder, we have implied one rate hike from the bank in its July meeting, and the market is obviously pricing much more than that. So we think there's some relative opportunities there. I think we'll wrap it up here. Thank you very much, Cathal. I think that was very informative. Hope everyone listening found it informative as well. And we hope that you tune back in when we have the next edition of Macro Minutes, which is going to be the global version, or indeed next month when we have the next European version. Thank you, Cathal.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.